Hey, Steve Jolly here with the Home Buying Skills channel. On today's show, we're going to talk about why your mortgage is too high. We're also going to follow the money. So are you ready to get started? Let's get to business. First, I want to share with you the history of something called line level price adjustment. Then we're going to talk about recent changes to these LLPAs. And finally, we're going to follow the money. If you follow the news, you may have recently seen that mortgage rates were artificially increased by the Federal Housing Finance Agency. And that's the agency that's responsible for Fannie Mae and Freddie Mac. So the FHFA recently announced that they were making increases to these starting in May. So they're increasing line level price adjustments. They haven't done this in a long time. And these are something that's relatively new to the market. And it's something that really flies under the radar for most people. And we're going to dig into that more in a second. Starting in May, many new loans are going to face increases in these line level price adjustments. And people that have never had to pay these fees in the past are now going to be subject to them. Now, LLPAs were first introduced after the Great Recession as part of the Dodd-Frank bill to restructure financial institutions. Because Fannie Mae and Freddie Mac nearly crashed and burned during the Great Recession, LLPAs were introduced to give them a way to build some capital reserves in case there's changes in the market. If you remember, Dodd-Frank was very controversial. It was fought over for a long time, and many of the changes that were made during it had a lot of resistance. For example, a huge new bureaucratic department was created called the Consumer Financial Protection Bureau, newly created with very little benefit to consumers or to businesses. The logic behind LLPAs were they were going to charge a higher rate to people who they thought were more likely to default on their loans. And statistically, those were people that had lower down payments or lower credit scores. So they decided to charge people with lower down payments and lower credit scores a premium on top of the interest rate. And is that really fair? And here's why I say that. Nobody thought about this. Charging artificially higher rates to people that could least afford it is going to cut off thousands of people, perhaps hundreds of thousands of people, from attaining generational wealth, without any statistical proof that charging more reduces default. Logic would dictate that if you're artificially having to pay more for your loan, you're more likely to default on that loan. The real problem of the Great Recession was not how much they were charging, but the quality of the mortgages they were approving. That's the history of LLPAs. And if you can't tell, I'm not a big fan of anyone artificially and arbitrarily messing with the financial markets. Now let's talk about some recent changes to LLPAs. Up until now, LLPAs were mainly focused on the lowest credit scores and the lowest down payment buyers. This is mostly your group of people that are purchasing entry-level housing and those that can least afford to pay artificially higher mortgage payments. Effective May 1st, this will now affect most middle-income home buyers also. That's right, you're going to pay more unless your credit score is over 780. And if you don't know, 780 is very good credit. Which led me to ask this question. Why are they charging more to very low-risk buyers in an area where home affordability is so important? And when we have some of the lowest default rates in history. And that led me to follow the money. So when you hear the words Fannie Mae and Freddie Mac, you think of some corporation that really has nothing to do with the federal government, and nothing could be further from the truth. Now, while these are mostly private companies, they're still considered part of the federal government. So when you get a conventional mortgage, is it eventually purchased by Fannie Mae or Freddie Mac? And they're the ones that set the rates for the LLPAs. All this money from the LLPAs flows into the coffers of Fannie Mae and Freddie Mac with little congressional oversight, and no one really keeping track of how many billions are actually being collected just under LLPAs. So also in that Dodd-Frank bill, they set certain capital requirements for Fannie and Freddie. So they're required to maintain a certain level of liquidity in case for changes in the market. And so they can continue to buy more loans as they become available. That's how our economy works. That's one of the huge engines that drives the U.S. economy. So once they hit those capital requirements, the rest of the money, get this, flows directly to the U.S. Treasury. the same U.S. Treasury that your taxes get paid to. Raising LLPAs at this time when home affordability is so crucial is a slap in the face to Americans. If you feel the same way that I do, I recommend you reach out to your representatives and senators and let them know how you feel about LLPAs. Thank you for watching this video on buying a home. If you liked it, hit the like button so we'll know that you enjoyed it. If you have any questions, leave them in the comment section below and I'll be sure to answer every one. And don't forget to subscribe and hit the bell so you never miss an episode. Take care and have a great day.